Welcome back to Investing Talk Podcast. Today we're doing an intensive review of, well, one of the most fascinating, and let's be honest, maybe one of the riskiest growth stories out there right now, the advanced nuclear tech company, Oklo.
Yeah, absolutely. And the big question we're trying to tackle, the one everyone's asking is Oaklo a good time to buy now? Because this isn't about looking at today's profits or sales figures. There aren't any.
Right.
It's purely a bet on future execution, hitting regulatory milestones, and maybe some game-changing news.
Exactly. So we're going to try and unpack this really interesting mix. You've got, strong technical signals. Analysts seem overwhelmingly optimistic, but there's also some very necessary skepticism like you'd expect for any company not making money yet. Before we jump in, just a quick reminder. If you find this useful, please hit that like button and subscribe if you haven't. It really helps us out. And hey, if there's a specific company you want us to analyze in a future segment, definitely leave us a comment below. We do read those.
Okay, so diving in. To really get why people are excited, you first have to face the cold, hard numbers. Or lack thereof.
Okay, let's start there. Because the current financial picture, it's pretty stark, isn't it?
It is. As of, basically today, September 30th, 2025, Oklo is solidly pre-revenue, zero sales coming in the door. And if you look for the usual signs of a stable company, profits, positive cash flow, they're just not applicable. NA across the board. In fact, the trailing 12-month net loss is sitting at negative $56.8 million.
Oof, $57 million burned through. That's significant. And it doesn't look like that heavy spending is stopping anytime soon based on the analysts.
No, not immediately. The consensus forecast for next quarter's earnings per share, it's still negative, expected around minus 13 cents. So yeah, still very much in high investment mode.
So that's the million-dollar question, or maybe the $57 million question. If there's no cash coming in from operations, why are serious investors, institutions putting money into this?
Right. And the only way that makes sense is if the underlying promise is huge and if they have enough cash to survive until that promise potentially becomes reality. That's where the fundraising history comes in. They've raised significant capital and they have backing from some big names, including, players in defense and energy. That provides the runway, the buffer they need to operate without revenues for now.
So the bet isn't on the current books, it's entirely on the technology, on the moat. What exactly are they selling that's got people betting so big?
They're developing and aiming to sell microreactor nuclear technology, basically small, advanced nuclear reactors. Their main product design is called the Aurora Powerhouse. And the key innovation, the thing that sets it apart, is this all-in-one liquid metal fast reactor design.
Okay, that sounds complicated. In simple terms, why is that design such a big deal compared to, say, traditional nuclear power plants?
It boils down to size, safety, and importantly, speed to market. Old-school nuclear plants. Massive construction projects. Decades, billions of dollars, bespoke designs. Oklo's Aurora is designed to be much smaller, modular, factory-built components. The liquid metal part allows for better efficiency and critically passive safety systems that work without human intervention or external power. And the all-in-one part means it's designed to simplify things, potentially lowering the huge construction and, crucially, the regulatory hurdles that have always plagued new nuclear builds. It's built for faster, potentially more widespread deployment.
And you definitely need help navigating those hurdles in the nuclear space. Government support seems vital.
Oh, absolutely essential. And they seem to have it. They've secured Department of Energy grants, and they're building partnerships with major engineering firms and defense contractors. This kind of support does two things. It helps validate the tech in the eyes of potential customers, and it can accelerate the path to actual deployment. It shows it's not just a lab experiment.
Okay, so fundamentals paint a picture of future promise, but current losses. Yet, when you look at the stock chart, it's telling a completely different story right now. The market seems to be buying that future promise big time.
It really does. The technical picture is, frankly, very bullish at the moment. The stock's been in a clear, strong uptrend. You see the classic pattern. Higher highs and higher lows being set consistently over the last few months.
And that recent action has been explosive. It closed recently around $116.51. Just the 2 weeks before that, it jumped something like, 35%? Does that look like a healthy trend, or is it just, getting ahead of itself on hype?
Well, the momentum indicator suggests there's real strength behind it, likely institutional buying. The stock is trading way above its 50-day moving average, which is currently around $82. And that 50-day is miles above the 200-day average, down near $48, When you see that kind of separation, especially the short-term average accelerating so far above the long term, it signals a very powerful upward trend is in place.
And there were some other positive signals recently, too.
Yeah, a couple of key ones. The MCD, the moving average convergence divergence indicator, it just flashed a buy signal that confirms the positive momentum shift. And the RSI, the relative strength index, which kind of gauges the speed and change of price movements, is at 60.74. Now, that strong definitely shows upward momentum is powerful, but importantly, it's not technically an overbought territory yet, which is usually considered above 70.
So technically, there could still be room to run before it's considered overheated.
Technically, yes. It suggests that while buying has been aggressive, there might still be capacity for more accumulation without triggering an immediate major pullback based solely on that indicator.
But let's be real, with moves like 35% in 2 weeks, volatility must be high. This isn't exactly a sleep well at night kind of stock right now.
Oh, definitely not. The volatility is significant. Over the past week, the average daily price swing has been around 11.4%. That's huge. But, that kind of volatility is pretty typical for a stock in a major breakout phase, especially one driven more by news, catalysts, and future potential than by current earnings. It's the nature of the beast for these kinds of plays.
And speaking of future potential, the technical models, based on this recent momentum, are suggesting, well, some pretty eye-popping near-term possibilities.
They are, unusually so. Standard 3-month projection models, purely based on the technical trends and volatility, are suggesting Oklo could potentially see another 91% gain from its current level. That puts the projected bullish trading range somewhere between, say, $119.55 on the low end and possibly up to $170.60 on the high end over the next 3 months.
Wow, $170.
Yeah.
That's aggressive. That's basically pricing in a lot of good news happening soon.
Entirely. It's a forecast driven purely by momentum and the anticipation of positive developments and continued execution. It assumes the catalysts hit.
Okay, so let's talk about those catalysts. What concrete news is the market actually waiting for? Especially on the regulatory side, because that's always the big one for nuclear.
Well, they just got a significant piece of good news on that front, actually. The NRC, the Nuclear Regulatory Commission, formally accepted Oklo's main design criteria report for review. And the key part, they accepted it under an accelerated timeline. That's not just procedural. In the nuclear world, speeding up the regulatory process is a massive deal. It suggests the NRC sees a viable path forward.
That's definitely positive. But we need balance here. Surely not everyone is convinced by this rapid ascent. We saw a major bank recently express some caution, right?
Yes, and that's a crucial counterpoint. You have to consider the skepticism. Just this month, September 2025, Bank of America actually downgraded Oklo. They went from buy down to neutral. Their main issue wasn't really the technology itself, but the valuation. They essentially argued that the current stock price implies a deployment pace for these new reactors that might be, in their words, unrealistic at this early stage.
So BofA is basically saying, great tech, maybe, but the stock price has gotten ahead of the actual timeline needed to build and deploy.
Pretty much. It highlights that core tension. Is the market excitement outpacing the practical realities of building a new nuclear supply chain?
Okay, so that sets the stage. Let's zero in on the specific potential events, the catalysts, over the next, say, 0 to 3 months that could either validate the bulls or give the skeptics more ammunition.
Right. There are a few key things to watch very closely. First, obviously, any further progress with the NRC or the Department of Energy. Getting the next permit, the next license, especially under that accelerated review, would be huge validation. Second, look for announcements about actual pilot projects. Getting an Aurora microreactor deployed, even a first-of-a-kind unit, particularly with a federal agency or a major commercial partner, would be massive news.
And there's an earnings report coming up soon, although maybe earnings is the wrong word.
Yeah, maybe a progress report. Q3 results are expected around October 15th. The focus there won't be on profit, obviously, but on updates to their commercialization roadmap, manufacturing progress, maybe capital expenditure plans. Any solid updates there could move the needle.
Okay, regulatory pilots, progress updates. What else?
The fourth area is more about market mechanics. Towards the end of the year, November and December, you often get ETF rebalancing, and you might see more signs of institutional investors either adding to or initiating positions. Tracking that institutional flow will be important. Big funds moving in can sustain momentum.
Right. So those are the tangible things to watch. But with a stock like this moving so fast, there's always the rumor mill. What's the speculative buzz? Any unconfirmed chatter that could really light a fire under the stock if it proved true.
Oh yeah, the rumor mill is definitely active. A lot of the chatter centers on federal validation. Strong whispers about an imminent major DOE approval or maybe a significant federal contract award popping up soon. There are also persistent rumors about a potential strategic partnership with a major U.S. utility, like a big power company.
Huh.
That would be enormous for validating the commercial scalability.
Any international angles being whispered about?
Yes, that's another one. Talk about an international expansion initiative. Specifically, Oklo might be looking seriously at the European market for microreactors. Sweden and France are the names that keep coming up in that context. And finally, there's some background noise about a potential breakthrough patent filing, maybe related to a novel safety feature for their modular design. Any confirmation on these could easily push the stock towards or even past that $170 technical projection.
And all this is happening against a backdrop that's generally becoming more favorable for nuclear power again, right?
Yeah.
The whole decarbonization push.
Exactly. You can't ignore the macro tailwinds. Globally, governments are looking at nuclear energy again, often with significant support, as a way to hit climate goals while ensuring energy security. That definitely helps Oklo's long-term story.
Okay, so let's try and pull all these threads together. Based on everything, the tech promise, the shaky financials, the strong technicals, the catalysts, the risks, what's the overall investment thesis look like?
Well, based on the sources and the data we've reviewed, the overall assessment leans quite bullish, actually. We'd give it something like an 8.5 out of 10 rating in terms of bullish conviction right now.
8.5, that's really high, especially for a pre-revenue company burning cash. What's the core justification for that level of optimism?
Right. It really rests on a few pillars. One, the potential first-mover advantage with genuinely breakthrough technology in a critical sector backed by significant government interest. Two, the undeniable technical momentum we're seeing right now happened just before a series of potentially major near-term catalysts. The timing looks interesting. And three, despite the lack of current revenue, there's strong buy-in from analysts and seemingly institutions betting on that market leadership potential.
Okay, but we absolutely have to hammer home the risks again. An 8.5 rating doesn't mean it's a sure thing. This is high stakes. What are the top 3 things that could derail this whole story?
Absolutely critical to remember the risks. I'd list 3 primary ones. First, commercialization and execution risk. Pure and simple. They are pre-revenue. Everything depends on their ability to actually build, deliver, and operate these reactors efficiently and on schedule. Any slips, any major delays in deployment, and the stock could get crushed. Second, funding risk. Burning through $57 million a year means they need cash. If commercial revenues or new partnerships don't materialize quickly enough, they'll likely need to raise more capital, which could mean issuing more stock and diluting existing shareholders.
Right. Dilution is always a concern with these kinds of companies. And the third risk.
Regulatory hurdles. Despite the positive signs like the accelerated review, the nuclear regulatory process is notoriously complex, slow, and unpredictable. Any unexpected delays, new requirements, or pushback from the NRC could severely damage sentiment and undermine the entire growth narrative.
So given that profile, high potential, high risk, high volatility, who is this stock actually suitable for? It's clearly not for everyone.
No, definitely not. It seems best suited for 2 specific types of market participants right now. First, you have the agile, short-term traders. People looking to play the potential news flow around those catalysts. We discussed the regulatory updates, partnership announcements likely over the next 3 to 6 months. They need to be nimble. Second, it could fit long-term investors who understand and are comfortable with the very high risks involved in an early-stage, potentially disruptive technology. They need a strong stomach for volatility and a belief in the long-term structural shift towards advanced nuclear, hoping for potentially massive returns down the road, but accepting the possibility of significant losses.
So wrapping it up, the core trade-off here seems crystal clear. With Oklo, you're not buying current financial performance. You're buying technological leadership, you're buying government tailwinds, and you're betting heavily on those near-term catalysts materializing.
Exactly. It's a calculated gamble on the future shape of energy. And maybe that leaves us with a final thought for you, the listener, to chew on. Considering the strong institutional conviction we seem to be seeing, and those powerful technical signals, even with BOFA raising valuation flags, what would it actually take for the market to fully buy into the revolutionary potential story here? Would hitting that $170 technical target be enough? Or does one of those big speculative rumors like a major utility deal or a massive federal contract need to become reality before Oaklo is truly seen as a generational energy leader? What's the real validation point?